We are back. Kevin has returned. So much to go over today. The latest earnings, how the Fed is reacting to data that has been incoming, and much more today on Money Never Sleeps. Welcome back, everybody. Thank you for joining us after a few days off. Before we get going, you know the drill. Hit that like button. If this is your first time listening, you haven't subscribed yet, go ahead and hit that one too. And if you've been listening for a while but you haven't subscribed, what the fuck are you doing? Nothing that Kevin or I say is financial advice, so please do your own research, yada, yada, yada. Kevin, welcome back. You are out west grinding away at the coal mines for, the last week and a half or so. How are we feeling? Back from your trip, back in the markets. What is going on, my friend?
I'm doing great, man. Glad to be back. Excited to talk about the market. Obviously, a lot of stuff has quietly been happening, but that's the thing that's why we're not popular, Jweb. We talk about the shit that's boring, that doesn't matter, but eventually piles up to a volcano just erupting right in front of everyone's face. We got Vesuvius coming our way, but it seems like right now there's a lot of quiet things that are happening. I think you guys hinted that I've wanted to talk about Asia. Asia has been my main focus because I've been up during the Asian hours because I've been out west, and it seems like there's tons of stuff that's been happening there. But outside in TradFi, I think there's some warnings out there that we need to kind of touch on. Some things that kind of scare me, especially I think Nvidia is also going to be an important date heading up. So we can kind of go into all that stuff today. But I think that there's a lot of stuff that are quietly happening that are kind of fitting the jigsaw pieces into what we've been saying for the past 12 months, even more so.
Yeah, I'm seeing, we've for a while now we talked about I think this is we're learning as we go too, right? I think we may have been discussing things, happy that it came on our radar, but discussing things before they were really hitting the mainstream. For instance, seeing more and more concern out there around the buy now, pay later, which you and I discussed. You brought it up to me initially, and we looked at it back in November and December of last year, before the holidays. And now, well, it's coming home to roost. We've been talking about commercial real estate for a long time, seeing more and more of these huge buildings, these 9-figure transactions that happened in the last decade, selling at a 95% loss. Occupancy way down on a lot of these. The housing market is starting to very much soften. There was for a while there here in Colorado, you couldn't the houses were just going like that. Like they were on the market for a weekend. Now, as I, kind of look for areas for my wife and I to move in the same state, I'm seeing houses that have been on the market for weeks, months now. Rates are really hitting people hard. Cash flow is hitting people hard. We're going to find out a little bit more, nothing too monumental today, but if you look at the earnings that are coming out, we have Toyota, Uber, AB InBev, Airbnb, Shopify, all companies that their earnings are very much impacted by the health of the consumer. If people have money, they're going to buy more cars. If they don't, it's going to go the other way. Uber, people are not going to be, spending as much time on Uber delivery, Uber Eats, Ubering places if money is tight. AB InBev could go the other way because they do really well during tough times because people will always find money to buy booze. Airbnb, are people shopping as much? Shopify, are people transacting as much online? All of these things that just kind of build at each other, and maybe there's some cracks in the foundation, maybe not. What else, in regards, there's not a whole lot going on as far as data this week. It's a really, really slow data week. A lot of Fed speakers, and the recurring theme once again is higher for longer, higher for longer, higher for longer. And I know you don't believe it because you expect everything to come crumbling down. But if that doesn't happen, these higher rates for longer are going to continue to really wear on. The Fed is going to break something. Something is going to break. It may have already broken. Yeah, it could already be broken, and it's just the full impact hasn't been felt yet.
Yeah, I mean, there's so many cracks that have been in the system that they've definitely broken something, both on the global level and also just here domestically, right? We saw that jobs number of, I forget what it was. I think it was the JOLTS report last week. It was down significantly.
we had the unemployment data. So unemployment was at 3.9% versus 3.8%. The number of jobs added came in under 200K. So
Right.
significantly under expectations.
And that's also kind of showing you that a lot of these companies aren't hiring people. They've kind of closed off their hiring for a lot of these. You go to any careers page. I saw today Tesla took down all their jobs from their careers page. That kind of shows you that they're not hiring new applicants. They don't want any applicants. They can't afford new applicants. So that's one thing that we're kind of seeing in the labor market. I don't believe it's 3.9%. I think it might be a little bit higher. Again, we saw that there is a margin of error in the BLS data. It depends on how they are calculating it, and also if we're using calculations from prior cycles, it might be a little bit different. But I do think it's above 3.9%. We're going to see, like you said, a lot of that information today. But the reason I'm very bearish on the fact that we're going to be higher for longer is because if the only thing that's really driving inflation, that number that the Fed is looking at, not necessarily how consumers are reacting, how consumers are doing, is oil and it's also shelter, then we are completely on two different pages because oil is showing us that demand is coming down. We are already seeing that seems like consumer is kind of softening. I think we got the consumer credit data yesterday as well, and it was down. I think half. It was cut in half. It was like 12 billion, but then it was 6 billion is what it came in at. Shows you that there's not as much money that's flowing around. Also, maybe the banks aren't willing to lend you as much because rates have been higher for longer for a period of time. They're not creating any new debt, which is how the banks kind of survive. So, and then we also got that bank failure that happened while I was gone too. So there's a lot of things that are just adding up to the point where it's like not making a decision is making a big decisive action to let just everything kind of crumble. And I think that's in this new economy that we're in, we're not in the 70s anymore. We're off the gold standard where, you know, one recession kind of leads into the next, which I really do believe that's kind of where we are right now. 2008 to 2020 to where we are 2024. I think that there's a good chance that they're holding and something's going to break, and that's going to be how we get out of this high inflationary period. And this might be just a reset that needs to happen. That's my base case. I think that's what we're probably heading towards. And so just to segue into what's important, what we kind of happened when I was gone too, we have to look at Asia. So on May 1st, they definitely did intervene in their currency markets. This was also the same day that's the FOMC meeting was. I wasn't there for it, but on May 1st.
Oh, it was just absolutely riveting as always, Kevin. I wanted to go walk into oncoming traffic listening to the same droll over and over again.
Droll Powell. It's a great name for him, isn't it? Japan's May 1st intervention may have cost $23.6 billion, Bank of Japan data shows. Why is this important? Well, we know that they're also in a rate hike cycle right now. They're raising rates. They're not cutting rates whatsoever. So if they're just kind of throwing money at something that's causing their currency, to keep it from going out of control, losing value against the dollar, kind of sounds inflationary to me. So that causes more problems for Japan. And why is this problematic? This is problematic because they hold I believe they're either I always get them in China confused. I think they're the second or the first largest holder of U.S. debt, which means that they have tons of U.S. Treasuries, exposure to that market. Which is also funny because we had a 10-year auction today and it went horribly. We also have a little bit more tomorrow. We're going to find out on how that treasury auction goes. But if this continues to be a problem and they need to offload some of this, that bleeds into the United States. It eventually will. But the reason why this is really interesting is because the last time that the yen was at this low of a value was April of 1990. What happened in April 1990? Well, that was the big speculation bubble that happened in Japan in the late 80s. It finally popped and it came down, I think, 37% in a matter of 4 months. But looking back further down here, there was, I believe, Chief Japan Desk Strategist at Mizuho Securities. This is a very large sum in a short period of time. It took 2 days, I believe, for that's what they did to clear. And that would have been last night, May 8th in Japan. So we're probably starting to see some of the effects of that right now. And that's also why I'm thinking that we're seeing the dollar kind of gain today and the yen also start to lose value again. So what they didn't necessarily save them. If anything, it just kind of, put a Band-Aid on a bullet wound, stop the bleeding for a few minutes, but it's not going to, heal completely. I think we have bigger problems here. And then we also saw that Suzuki last night from the BOJ announced that they are pretty much willing and open to do anything in order to save the currency market. That's very scary because that means that they can just offload a shit ton of U.S. debt. And why that scares me is because the U.S. says they're going to work with them on that. So what does that tell you? It tells you that the U.S. is probably in a bad place right now where they need some money to flow into the treasury markets, in some bonds, and they'll probably work with them in any way. It's almost odd to see this happen because if they end up unwinding this trade in Japan, the US Treasury market would take a short hit real quick. And then eventually you would see not eventually, probably in a matter of weeks at most, you would see the equity market completely reverse. And then you would see all that money flow back into US Treasuries. So it's almost like they have to completely, break something in order to fix the bigger problem of not having enough inflow into the market. We've seen the yield curve absolutely inverted for the longest period of time, and I think that this is probably going to be the thing that causes the US to see a lot of that money flow back into treasuries, which I know would save Janet Yellen, weeks of sleep, at least for a little bit.
Fucking Janet, man. All right, all right. So there's our Asia update. I appreciate you bringing that to us. I know you've been kind of just, we're doing less right now. There's not a whole lot of activity. It's the second week of May. Okay, we're in this first full week of May, second week of May total. Is it sell in May and go away time? I've seen, some of the bigger banks out there are telling their people, no, don't sell in May. It's an election year, so May is going to be better. I don't know about all that. Where are we right now with equities, with crypto? We're seeing this like slow stair stepping down. Is this a bull flag setup? What's coming next, man?
Well, this is the thing that's really chaotic and why I kind of want to bring this up. So let's just look at the S&P. There's a lot of fucking shit on this chart right now, and that's because there's a lot of shit going on with the S&P. So
I have no idea what is happening here.
Let's do this. I can't even. I want to just like delete
gaps on gaps on gaps.
All these gaps, they're there. I'm just gonna delete them all. That way we can see what we're fucking doing today. I'll delete most of them. We'll leave everything from there. But pretty much what we're looking at here is an ascending wedge, right? Eventually we're gonna break out of it. We broke out of it. We had a good move to the downside. What was that? From the heights down, that was 6%. It's a good move. Jim Cramer thinks that was the bottom. That's the funny part. When he put that out yesterday, I was so happy. I was like, damn, I was having a shit day. Thanks, Jim. You really gave me some hope in life. But yeah, he put that out there, and I thought, okay, let's look at the chart and see what we're doing, right? So I'm looking at this, and it's kind of hard to see on the daily, but I just want to pull up the ABC count. Wave A, down for B, wave C. And it's funny that C stops right around the top of this parallel channel that's right here in white. You have to keep an eye on that because I do think that we are finding some resistance up here. And if we are finding resistance up here, that's another sign that we need to be worried about. This means that we're kind of rolling over and it's a lower high. I'm not going to say anything bad until the end of this, but I also want us to take a look at the volumes. The volumes have been all green, sure, but they're decreasing as the price has been pushing up. That's bearish divergence. We talk about that all the time. And the reason is the 50 moving average right here has been pretty much our level of support that we're kind of hugging to. There's not a lot of support down here. Obviously, we're at all-time highs, right? We bounced significantly. The question is, if the 50 gets lost, are we going to the 200? And yet my answer would be most likely. How fast would that be? I have absolutely no idea. But I do have some concerns because also the daily stochastic RSI is extremely overbought. So you have a lot of things that are kind of lining up for there's going to be some type of correction. I don't necessarily know if it's going to be, maybe we can even look at this too. What if what we're looking at is even a 5-wave, right? And we're looking for a wave 3, we're going to get our wave 4 somewhere around here. Maybe wave 5 comes down even a little bit more. There's a lot of things that we're just really looking over. And even if I want to say this, back in 1987, there was a huge market crash, right? I believe it was in like October of 87 or so. People didn't expect it, but it has a very similar fractal to what we're seeing right here, where we put in a high, came down, put in a lower high. And if we start to roll over here, then I think that there's a good chance we could see a limit down day, not too distant future. I'm not trying to be ultra bearish here because obviously anything can happen. We could carry this out. Yes.
Ultra bearish. That doesn't sound like you at all.
Yeah, I'm trying to be reasonable here because I think I'm also just numb to the fact that you can't wish a market into existence. Obviously, even how bearish everything is, you can kind of hold it up. And I'm very much on the side that we could start to roll over here. We could start to test the 50 moving average once again. Maybe not today, obviously not today, but maybe tomorrow, maybe towards the end of the week. You start to see people kind of sell off into the weekends. Okay, maybe we're at the bottom of this parallel channel. Does it go any further than that? I don't know. But there is a couple of, we're seeing this across all the board, right? This is rolling over, very similar setup. once again for the Nasdaq. Nasdaq's going to be a little bit questionable because there is one stock I think that we need to worry about, and then also here for the Dow, right? It's putting in a lower high, same ABC corrective pattern. Stochastic RSI is extremely overbought. We don't have volume on that. We don't have volume on the Nasdaq itself. I'd have to pull something else up to find that. Let's look at the Russell. Russell's also putting in a lower high once again, and everything's got extremely overbought really quick. I am very concerned. And then even to get even worse about it, the VIX is at 1310. People are not taking insurance here. Why does that scare me? It scares me because that type of volatility can absolutely unwind if, say, the S&P has 2 days in a row where it's down 100 points. And the reason I say that is because the people who are taking the opposite side of the bet right now on the short volatility trade are the clearinghouses. They're the market makers. Do you think Citadel Securities and all those guys are going to be happy that they keep losing on people shorting the market? No, eventually it's going to unwind at some point, and they're going to take the opposite side of the trade, and that can cause the market to move significantly without any warning. Very similar to 2018, even in 2020 when we had the crash. So what I'm seeing right here is that there's really good setup for downside here. Again, I think we've had a really good rally, but now that it's May 8th and we're not seeing as much volume come in terms of the buy side that we expected, since the blackout window has now ended, these corporations can buy. That's kind of concerning too. So when we say, sell in May and go away, maybe it doesn't have to happen in the first half of May. Maybe towards the end of May, we start to see some pain, some panic. I don't know, but I definitely do see that there is writing on the wall that we could see a bit of a correction here. If anything I said that is logical doesn't make any sense, Jim Cramer pretty much giving the game away. So that's kind of the other safe way you could say that this is foolproof. Jokes, obviously, but
you gotta love it. Let's go ahead. I want to take a look. Anything in equities before we transition over to crypto?
Yes, real quick. Apple, when I was gone, they shot up an insane amount. They said that they're going to do a $110 billion buyback. Someone posted on Twitter, which is fucking hilarious, that they only had about $32 billion worth of cash and liquid assets that they could potentially buy back. So don't get surprised if some of these companies that are just doing dog shit in sales start saying, stuff like, we're going to cure cancer next. It's the type of mentality of they're going to just say whatever they can in order to save some face. They could put $110 billion if they had $110 billion, but that's just not the reality of that situation. The one that I'm worried about right now is NVIDIA. I don't think that Nancy closed her trade yet. And the reason I'm worried about NVIDIA is because I think that there could be one last run up heading into their earnings call. And the reason I say that is because I'm looking at this and I'm trying to make sense of this fucking parabolic. I mean, this is absolutely insane. I'm not going to say what this is. You guys know what that is. There's a couple of companies that have done that in the past, but let's go here. Let's do 1, 2. I mean, we have to say this is 3. Maybe this comes down for 4, and we can get just a little bit higher for a 5. And then the 3 is just the overextended wave. And that could be the 5 waves to the upside that we're looking at. And between now and the 14 days before their earnings, I could definitely see us pushing up, higher. The volumes are somewhat low down here on the weekly. If we go to the daily for NVIDIA, somewhat low. I think that there could be a push, one last squeeze if people are starting to short this thing, that we could get to that point. It doesn't have to hit all-time highs after earnings. I think that it'd be more likely that they do it right before, expecting everything's going to be great, and then you just kind of get the opposite. But we also don't know how investors are going to react, right? Investors might absolutely just be like, you know what? We had some good gains on NVIDIA. Let's step aside from this. But this would be the one that I think could fool a lot of people. This one could put a shut for all-time highs if that's the pattern that we're seeing. So outside of that, on the way down, if earnings end up being shit and it's at all-time highs, I wouldn't be surprised if we start to close some of those major gaps down by the 600 level in the following weeks. So that's really all I have for equities. Do you want to jump into crypto next?
Let's go to crypto. Let's start with Bitcoin. Looking at the chart here, about 1 month ago to the day, we were up over 71K, about 71.6. We touched over 72. Now there's just been this, slow bleed down to the 62 range. We've seen wicks all the way down to 56.5 as recently as a week ago. Are we seeing the beginning of the unraveling? Some people, I'm sure, if they squint properly, they could see a bull flag forming on the daily for Bitcoin. What are the charts telling you?
It's very interesting. It's when I'm looking at this, and obviously I can say, okay, well, this is a bear flag because it's putting in higher highs, higher lows. I'd be lying at that point though, because obviously we broke down from this and we came back in. Technically, we're in it. We would need another test up here. What I'm seeing is a market that is distributing assets for a period of time in order for people to get out. That is just my base case looking at this. I think this is pretty much textbook Wyckoff distribution. We know we've talked about in the past when people are trying to do, distribution when retail does it at the bottom and it's kind of like the supply zone. And then I see it up here where maybe some of the people who are larger in the field have a lot more, a lot more Bitcoin than other people are taking advantage of this. But you're not seeing as much buying demand as we once were, right? Maybe when we get down here, but I think that's just because people are like, "Oh, it pulled back; it's going to go up again." I think that what we're looking at is we're looking for a target somewhere around the 200 EMA, which will put us around 52,000. Now the question is, if we get to 52,000, the 200 doesn't hold, where are we going from there? Well, probably a lot lower. I would say that it would put us right around maybe 40K, 39, 40K. And from there, I think we would probably see a pretty good bounce. Again, I'm just projecting this, looking at it, how it would happen. I'm thinking that if we get to 40K, we would have a pretty good bounce to maybe like 48, 49, maybe right around there. And if we're looking at this in the context of history, that's pretty much what happened back here in March of 2022 before we just had, absolutely just downhill after that. But we really have to see because on the daily, we're overbought. So we do have to come down. I think we're finding some resistance on the 50 moving average right now. Between the 50 and the 200, you're probably going to trade. If the 200 doesn't hold, obviously that $40,000 scenario works out. Let's look at the weekly. The weekly is oversold, right? But the weekly can stay oversold for a period of time. The one that more concerns me is the monthly. That monthly, first off, we got a bearish engulfing candle in the month of April. Right now, we're having this weird ass candle in the month of May. Obviously, there's still a lot of time left, but the volumes are down significantly. I mean, this volume is absolutely dead. There is no volume in this market whatsoever. And if you continue to just absolutely start closing down here, it's very possible that there's just so much momentum to the downside that we could be at, 30,000, fill this major gap that we had from the second that I believe, what was that? When Tether started printing billions of dollars, so like $4 billion one day they printed. So it's really interesting to look at Bitcoin here. I'm staying more on the side of I don't want any exposure to it. I personally, if I was a betting man, I would think that low leverage and short to the downside would be what I would do. But I'm also just don't want to play this game right now. This is a very manipulative game. We're going to talk about Kraken right now, but there's a good chance that we could see just absolute chaos if this turns out to be distribution and something happens to the point where it just sets it down to 40, this 52K and it doesn't hold. Take a look at the USDT as well, dominance. This is another chart where I don't want to be in crypto right now because every time that this thing bottoms right around here, it starts to move up, something bad happens. It's just the fucking truth. November 2021, that was the height of the market. And after that, as soon as it started going up, obviously July 2022, that was right after everything. That was like what, $17,000 Bitcoin, $18,000 or so. It stayed elevated enough till we got to FTX, which, by the way, apparently they're making their creditors whole. If you read into that also, but that news that they're paying people back in their bankruptcy filing, it's to the date of when it collapsed. So they're pretty much assuming that your Bitcoin is worth $16,000, not $62,000 like it is currently. So don't get excited if you're getting your FTX money back. And it's only for people who have $50,000 or less in their account when it collapsed. So that's just tangent thing that we had to bring up. But let's bring that back to what's going on right now with Kraken and all these other exchanges and why I do think that there is a huge black swan not too far off for us, especially given what happened with CZ. 4 months. I'm not going to even comment on that. I think it's a zero-sum game at this point. If CZ gets 4 months, but he takes down something bigger than that, that's corrupt in crypto, I'll take it as is. So I'm kind of just indifferent about that news. But this is one thing that's going to be really interesting. Kraken, one of the most leading cryptocurrency exchanges, has announced upcoming changes and restrictions to its U.S. clients as of June 1st, 2024. So you got a few weeks. If you do not accept new terms and services, all trading will be shut down in New York starting June 1st. Why is this important? Kraken is one of those exchanges back in October that was receiving tons of Tether right when Bitcoin was pumping. If this is kind of how we were seeing a lot of things that were going on with Binance, with FTX, some of these smaller exchanges, Huobi HTX, same one, but I think they're called HTX now. They were getting a lot of Tether. And Kraken is, I believe, as of right now, one of the only exchanges that was receiving that Tether, the same amount, $64 million or whatever it was, $1 billion of Tether that was being printed. If they were receiving that and they were getting out in USD, Kraken was their only way that they were able to do so. They were not able to get off any other way. They couldn't have done it in Binance. Binance didn't deal with USD after all the SEC charges and everything like that. Coinbase, I don't necessarily know how intact they are with Coinbase, but this is their off ramp for US dollars. And I haven't seen Tether print in a while. I wouldn't be surprised if this is part of a larger regulatory aim at some of these stable coins that are absolutely manipulating markets, especially now that we have the Bitcoin ETFs. That's going to be something that I know the SEC is not going to be happy with. And I think it also plays into a little bit of what CZ was doing, the fact that he got 4 months. I definitely think that CZ spoke about knowledge that he had pertaining to the industry itself. I will say that. I don't think that's a stretch either. But the question is, did he rat on anybody, right? I think that's what a lot of people are saying, because CZ got 4 months, SPF got 25 years. Doesn't necessarily make a whole lot of sense that they gave one more and one less, unless there was some type of plea. We don't know anything yet, but I'd be very interested to see if anything that he said has to do with Tether and Kraken. I'm going to make a bold assumption here, or I guess guess. I think that by the end of 2024, you will not see Tether listed on any U.S. cryptocurrency exchange. That's my best case scenario. I think what's going to happen. I think that Coinbase and Kraken and any other U.S. operating exchange is probably going to have to delist Tether. And it would kind of make sense with a lot of what we've been talking about when it comes to Janet Yellen, Elizabeth Warren, and a lot of these other individuals who've been talking about stable coins being an issuer to these banks, or these banks using these stable coins to send money to Russia, to China, to Iran. It's going to be very interesting to see if that has anything to do with it. But I'm not a man that ignores signs when we're looking at markets, because I think that there is a bigger truth out there when it comes to how things are playing out. And it just seems like Tether is not necessarily a great space right now. So I just don't see them or anyone else coming in to save the crypto market. I think that there's a lot of headwind, if anything, for both crypto, and when it comes to regulation, a lot of pain that's going to come from it. I just don't necessarily know when it's going to happen, right? So that's just kind of what my assumption is from that news, and then also what we're seeing in the crypto market. Seems like a lot of people are
out there, Kevin.
X-Files, I want to believe. I've never seen that show. I got to watch it, man. I feel like I would love that. But yeah, so
you would absolutely love it.
Pretty much what I'm just saying is crypto people who have a lot of crypto seem to be distributing Bitcoin up here. Might be a reason why. Seems like there's a lot of things that people aren't paying attention to. This Kraken news, I think, is pretty big. But we'll only find out. We only called CZ and FTX, didn't we?
I guess we'll find out, man. Who knows? Who the hell knows at this point? I think that is going to be how we wrap it up for today. We are seeing, as our good friend and your stand-in last week, Mr. House, who we greatly appreciate, has pointed out, we are seeing crypto pull back a little bit as we speak. ETH back below 3,000. Solana, the other alts are starting to pull back a bit too. So we'll have that to discuss. We'll have plenty of earnings that come out after the close of markets to discuss tomorrow. That'll be the main topics of discussion. So can't wait for it. Happy that you're back. Happy that House did such an amazing job stepping in for you last week. If you have not yet, do us a favor. Like, subscribe, comment, share, blah, blah, blah. We'll be back a regular time tomorrow, knuckleheads. Appreciate you all. Love you guys. Stay safe, and we'll see you next time.
Take care, everyone.